Stocks drift down with the market breadth seeing a negative tilt. FMCG, financials and healthcare the big drags, while metals and realty gain.
Blackstone has inked a deal to pick up just under 10% stake in Federal Bank via preferential issue of warrants worth around 6,200 crore rupees. The private equity giant will also get to nominate one non-executive director. The deal takes the tally of foreign investments in Indian financial sector in 2025 to $7.5 billion.
A collapse in the Dominican Republic mine pushes copper prices up. A shutdown of Alcoa's refinery in Australia boosts aluminum to a 3-year high, and bottlenecks in Japan and Kazakhstan smelters lifts the price of zinc. That means all the metals are shining today.
The Defence Acquisition Committee clears proposals worth 79,000 crores of the Army, Navy and Air Force, spelling big business for Indian vendors like Bharat Dynamics, BEL, Cochin Shipyard, Garden Reach, Shipbuilders and Mazgon Docks.
Cipla inks a pact with Eli Lilly to sell its popular weight loss drug Mounjaro in India under the brand name Your Peak. Now, while Eli Lilly will continue to sell Mounjaro in India, Cipla will help it penetrate deeper into the market.
Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Bhatra and with me is Mangalam Malu as well as Vinny Motiwala. Well, it's turning out to be a session where we're seeing some amount of profit booking come through. So the Nifty is just about lower by around 65 odd points. We have the mid-cap index, which is just about flattened out and looks like it's probably going to just about move into the red as we speak. Advanced decline ratio, we could be wanting for more, but 1,000 stocks advancing to around 1,700 stocks declining. That's the picture on the National Stock Exchange. Let's see whether there's any kind of improvement as we go along. On a week-to-date basis as well, the Nifties are just about gained around 0.4% as compared to the mid-cap index, which is up around 0.8%. But milestone levels were passed this week for the Nifty, for example, surpassing 26,000 on an intraday basis. But as of now, profit booking is the name of the game. Hi, guys.
Hi, profit booking indeed the name of the game, but nothing really to worry about. It's par for the course right now as we're looking at it because of a couple of factors. At lower levels, the Nifty is finding some purchase. The way the option writing has been taking place right now appears that 25,700 to 25,750 could be a bit of a support for the immediate term. But more importantly, yesterday's high would be an important level to watch out for on the way up. So after this near 1,000-point rally from the lows over the last 7-8 trading sessions, Nifty is consolidating at higher levels. We'll watch out for a couple of these FMCG names which are seeing some profit booking today. So HUL, for instance, had an inline set of numbers, the top Nifty loser today, and alongside that we are seeing some decline in names like Titan as well. Remember, gold prices have come off the peak as well, so maybe some bit of sheen coming off Titan too, and at the same time we're seeing some selling in Colgate. Importantly, I'm watching out for Nestle, which so far has reported the best set, and that stock's actually outperforming in an otherwise wobbly FMCG index. So Nestle comes up for you actually at the high point of trade.
Hi, Ekta as well as Mangalam. Good afternoon. But today, while FMCG is seeing some bit of a profit booking, look at the metal space, right? Nifty metal top sectoral gainer. And in that, we have all these names that are buzzing in trade. Whether you look at a Nalco, Hindalco, Hind Copper, all of them are managing to hold on to gains of around 3 to 4% in today's trading session. In the broader end of the market, we also have Shipping Corporation, which is buzzing in trade among the top movers in the Nifty 500, as well as Granite India. This is also buzzing in trade. So let's keep an eye out on these names as well. But a whole host of other stocks are buzzing in trade, and Vivek is joining in with us to give us those details.
Well, thank you so much for that. Very volatile trading session, but in the last 15 minutes or so, certain amount of buying has been seen, and that's actually aided the kind of advanced decline ratio towards favor of the advances. But like you mentioned, quite a few stocks on the radar. We have to start with the metal index, especially the aluminium names. Have a look at names like Hindalco, Nalco, Vedanta. All three of these aluminium players are doing very well in the session, off from the day's high, but still have over 2.5 to 4%. The other set of stocks that are doing quite well is the entire NBFC pack. Have a look at a name like Credit Access Grameen, up over 5%, SBFC Finance, Samman Capital, up over 5%. All of these names doing very well. Granite India, another name that you alluded to earlier, that particular stock, the top NSE 500 gainer, almost on good volumes too today. Bharat Dynamics, along with a whole host of other shipbuilders and other defense names, are seen as a key beneficiary of the DSE proposal clearance, higher by over 2% today. And Blue Star, this particular stock, one of the few names from the consumer durable pack that's doing quite well in the session today. On the other hand, quite a few laggards as well. Like you had highlighted earlier, the FMCG pack seeing a bit of profit booking today. HUL, after yesterday's conference call, that particular stock down over 3%. Colgate-Palmolive, market share concerns over there, worries about margins going forward as well. That particular stock down over 3%. And Ather Energy, the stock did quite well in the last few trading sessions. About a profit booking is what we're seeing on this particular name today.
Okay, all right. Well, thanks very much, Vivek, for that. So those are all of the buzzing stocks at this point in time. But let's get talking about our movers and shakers segment, where we track a whole host of stocks which are buzzing in trade. First up, I'm going to address Cipla, which is in focus on account of the Eli Lilly deal that they have struck. So just to put it, just to give you the news, So what exactly has taken place is that Cipla has tied up with Eli Lilly, which is basically a global MNC, to market tirzepatide in India. Now, the agreement is for distribution and promotion of tirzepatide in India. Tirzepatide, as it is more popularly known as Mounjaro by Eli Lilly, which is basically the diabetes and weight loss drug, the GLP-1 drug, which they sell globally and which they launched in India as well in March 2025. So Cipla will be marketing tirzepatide under a second brand name called Urpeak. So Eli Lilly will continue to market Mounjaro in India, but Cipla will launch the same drug under a different brand name called Urpeak and will be selling the same drug, which is manufactured by Eli Lilly and at the same price, but just branded differently. Now, what is the advantage of that? Is that they will get more access for this particular drug. Eli Lilly has a certain amount of distribution. Cipla is much more well entrenched in the Indian system, and hence they have a better distribution strategy, and hence they will be able to market the drug better, and hence the access for this particular drug will then increase. Now, in terms of potential, the GLP-1 market could be around $1 billion over the next 4 years, according to analysts. So this could add around 3% to Cipla's domestic revenue and 1.5% to EBITDA in the next 3 years. Major players are waiting to launch semaglutide, which is basically the generic version of Wegovy in India, when it expires early next year. So this is something that the street will watch out for, that according to them, this is quite an innovative partnership that Cipla has struck. Just a couple of questions to keep in mind, which we will probably get answers to over a period, is whether or not this particular agreement is exclusive or not, or whether Eli Lilly can partner with other companies. And separately, what does this do to Cipla's plans to launch semaglutide in the Indian market as well? So as you can see, Cipla, the stock itself has run up quite significantly. It's up around 11% before the deal was struck in the past 2 weeks, and hence maybe a lot of the good news is factored in.
Take that point, Ekta. Thanks a lot for that. So that's about Cipla. Meanwhile, just watch out for Federal Bank as well. The stock on our radar for a long time. There were murmurs that the deal would happen, and the much-awaited deal indeed did happen. Gaurav?
Well, yes. When we look at Federal Bank, now Blackstone is going to invest around 6,200 crores in the bank for a stake of 10%. Remember, bank will be issuing around 27 crore convertible warrants for that, and they have got a share. They will be waiting for the shareholders' approval. Board has approved for the issuance of the warrants. Remember, after that, they will have 18 months to exercise these warrants, and at the same time, 25% of the entire deal amount will be payable at the time of issuance of the warrant. Now, what remains another key thing to watch out for is that the usage of fund. Now, when we look at the CET ratio or CRAR ratio, both the ratios are well above the guided range. When we look at CRAR ratio, it is at around 15.7%. CET ratio is at around Tier 1 ratio is at around 14.37%. So definitely one thing to watch out for is that how these funds are going to be utilized for the bank, because given the strategic growth drivers that they have given in February 2025, they are also targeting to place itself closer to next 3 or the best 3 banks. And with this, they have also said that the key focus areas will be in the wealth management, non-resident segment, corporate banking, and to become SME bank of choice. So definitely that is one question to watch out for, is that how they will utilize the funds. But as of now, big investment coming up in Federal Bank with around 6,200 crores of fresh capital from the Blackstone's investment to get around 10% equity share in the bank.
Okay, thank you so much for that, Gaurav. But Mangalam, you're also tracking Midwest, that is up almost 8%. What's happening here?
Well, Midwest is the new listing today, and it's listed about 8% higher than what, the issue price was at around 1,065 rupees. It's a leading player in the natural stone industry. It's experience in exploration, mining, processing and export of dimensional granite, but more importantly holds 64% share in the India's export market for Black Galaxy granite, which accounts for nearly 70% of their sales. But importantly, the trigger for them would be expanding their product portfolio through extraction of branded laser granite, grey marble and Celestia quartzite. So their current quartzite capacity can give them revenues of almost 250 crores. But they have used these funds from the IPO to double that. So that could be another 500 crore worth opportunity. If you look at their last year's revenue, 626 crores, EBITDA margins of 27%, net profit at around 133 crore rupees. This year, first quarter as well, matches that sort of run rate. But importantly, we spoke to the management on a couple of things, and they said, the current margins at 27% thereabouts are sustainable. In fact, their aspiration is to go to that 30-35% mark. And also their aspiration is to take their revenue from 140-150 crores per quarter to about 250 to 300 crores per quarter, taking their revenue to about 1,200 crores and margins at around 35% by FY30. International peers, they say, have margins of over 40%. And that's the business for them, which will be a big contributor. In the next 3 to 4 years, they believe quartz and HMS will be more than 50% of sales versus sub 30% right now. 70% currently comes in from black granite, which grows at around 11% as a CAGR. The other businesses turn up in terms of growth as well. Let's hear out what the management, in fact, had to say to us about the growth prospects of the company.
In terms of the largest tailwinds are going to come from our new businesses, which is quartz for engineered stone, as well as solar glass industry, which we have commenced production last quarter. And that is in the short term. And in the medium term, the growth drivers would be the heavy mineral sands project, out of which we will supply the feedstock to the titanium downstream industries, as well as the byproduct monazite, which will cater to the rare earth industry. Our margins of current business are sustainable because of the cost measures and the positioning of the business that we are in. We are sitting on a resource which is rare and supplies to a global feedstock in terms of the granite. And if you look at the margin profiles of similar companies, though they are not in India, outside India, for example, Iluka, which will be a reference in Australian exchange for heavy mineral sands business, their margins are upwards of, it's listed on ASX, upwards of 40s. And in rare earths, you can always refer to companies like Linus Rare Earths, which is also listed overseas, and you can look at those numbers.
Okay, all right. So a decent listing coming in from Midwest. The stock is up around 8% at this point. But let's move on from movers and shakers now. And here is the latest on the India-US trade negotiations. Commerce and Industry Minister Piyush Goyal says both nations are making progress in terms of negotiations for a proposed trade agreement, and he hopes the deal will materialize in the near future itself. Listen in.
We are in dialogue with the United States of America. Our teams are engaged. We recently had the Commerce Secretary visit the US, and he met with his counterparts. We continue to engage with them, and talks are progressing. We hope to work towards a fair and equitable agreement in the near future.
Okay, on that note, we're actually going to slip into a very short break. After the break, we'll get you more on the markets and connect with the management of Orkla India, as 1,667 crore rupees IPO will open on 29th of October. Stay tuned in for that conversation. Welcome back to Halftime Report on CNBC-TV18. Nifty as of now, 25,840 levels, down almost 50 points in today's trading session. Nifty as of now. But let's move on and shifting focus to Orkla India. Now, the parent company of MTR Foods IPO is going to be opening for subscription on 29th of October. My colleague Rima spoke with Sanjay Sharma, who's the managing director and CEO of Orkla India, on the MTR Foods acquisition, the revenue mix, and more about the company. Listen in.
I think we Orkla entered India in 2007, as you know, through the acquisition of MTR. Our journey in India has been a quick study of the regional preferences and a deep understanding of the consumers, which led to the purchase of MTR as a company. Now, we are unlike any other multinational. We are, we don't look at India as a single country. Of course, it's a single country, but we look at it as a collection of 28 markets. And as a result of which, I think our focus has been to build regionally dominant brands. And as we progressed in our journey, I think what we did, we acquired Eastern, which was also a great acquisition because it helped us move from one state to another state and helped us acquire a very strong heritage brand in the state of Kerala, which talks to a very different cuisine than what MTR talks to.
So what's the breakup between spices and condiments? Which are the two areas you're present in?
So spices, as we have two categories, spices and convenience foods, right? Spices, as you know, is the core of Indian food. Without spice, there is no food. Spices contributes roughly 66% of our business, and the rest is convenience food, part of our business.
And if I look at the revenues, Sanjay, it's not been growing very fast. It's about a 5% CAGR. Do you see that? What explains that? Because it appears that the packaged food industry as a category grew faster than you. So were you underperforming? If yes, if you could tell us the reasons. And do you see this changing?
I'm not sure about how things have moved. I think our current performance is a reflection of, our short-term performance is a reflection of macroeconomic impacts that are there. And I think you know it better than I do. When you look at what's happened in the last 2-3 years, you've seen FMCG slowdown happening, you've seen consumption squeeze happening, you've seen inflation go up, led by food inflation, which has got by. But if you really step back and look at what has been our journey so far, when we had just MTR between 2010 and 2020, we had grown at about 13%. Then we did the Eastern acquisition in 2021. That was the COVID period. So you look at after COVID, 22-24, we've again grown at 13.2%. So I think economic cycles come in and go out. I think you should look at what is the volume development in the company. And when you look at our quarter one numbers in the RHP, you clearly see that we are continuing to build the business very strongly with about 8.5% volume growth that has come through. Price growths will keep happening because inflation keeps fluctuating in the country.
And you're also on the right path when it comes to margins.
Yes.
The margin improvement trajectory is very impressive, and you now stand at 18.7%.
Correct.
What drove the margin expansion, if you could give us a couple of reasons? And, are these margins sustainable, or do you see it even crossing 20%?
I think, we talked about food inflation and how or deflation in spices and how it hit our top line revenue growth. So we did see a slowdown in that. But on the other hand, our margins have expanded. So our margins have expanded at the back, I think 50% at the back of raw material price decrease. And 50% is at the back of many inside initiatives that we have taken in terms of driving, operational efficiencies up, whether it is a shift towards the sale of value-added products, whether it is outsourcing from low value-added production, whether it is digitalization that we are doing, whether it is the manufacturing rationalization programs that we have put in, and obviously the everyday black belt or cost improvement programs that we run in the company. So all of these have actually also contributed to the margin expansion. So we are on a good trajectory as far as margins is concerned.
Yes, no. Do you think margins sustain at these levels or expand?
I can't give futuristic oriented statements at this point of time. But I think we are in a good place. I think we've got great programs going. If you want to normalize our margins, you can take half the margin improvement and reduce it, and I think that's the right level for us to continue to build it from.
Got that. You made it very clear that, you all are different from the other MNC players who have this one objective that we're a pan-India player.
Yeah.
But you want to go deeper. You see yourself as a regional player, and you want to go deeper and provide more value, which also shows up in the way your revenue breakup is 70% from the south.
Correct.
So take us through that strategy, and also on the international side, which is now 20% of your overall revenues.
Yeah. So let me first talk about the domestic side of the business. I think most people look at India as one country, and we've done a lot of investor meetings. Everyone talks about pan-India. To me, in foods, I think there is nothing known as pan-India. I think food is regional. You are from Maharashtra. You don't eat South Indian food every day, do you? Right? So I am from Punjab. I am running a South Indian company. So I think somewhere you have to understand that food is local. Okay, and in the four South Indian states, they are not one homogeneous mass. They are different cultures. The Tamil culture is different from the Karnataka culture, which is different from the Kerala culture. Different cuisines, right? And I think food is local. Brands are local, and therefore the business of food is local.
Okay.
So there is, in our minds, I think we are building our business with that philosophy in mind. It's not that we are not available all India. I'm available in Delhi, I'm available in Ladakh, I'm available in northeast of India, I'm available in Gujarat. We are available everywhere, but we are not the local food for those people. So we are the local food of Karnataka, we are the local food of Andhra and Telangana, and we are the local food of Kerala, and that is why our 70% of our revenue is set out there.
Okay, we are out of time, so I want you to quickly explain why is your capacity utilization low at 46%, and tell us about the balance sheet, because you're not doing a fresh raise, which goes in money going into the company. So very quickly explain these two.
On capacity utilization, I can tell you that when we did the Eastern acquisition, we had 4 factories in MTR, 7 in Eastern, and we had the average of that utilization ended up with 9 factories and 46% capacity utilization. I don't think that's a problem. It's a legacy that we have acquired. I think going ahead, we are the way to look at it is that we don't need any fresh capex, because capacities are pretty fungible in nature. So we don't need any fresh capex going ahead. In terms of why did we do OFS and not a primary issue, I think we are a cash-generating company. We are generating 300 to 400 crores. So we have enough of capital available in the books. Our balance sheet is strong. We don't have any debt. So if you need to raise any money, we can do that very easily.
All right, so that is the management of Orkla, which is the parent of MTR Foods. With that, what we'll do is take a short break, come back on the other side. We get to market technicals. Manish Atirumani from Deen Dayal Investments joins in with some trading strategy. Stay with us.
Welcome back. Well, for the markets, it's definitely a bit of a subdued day at this point. So we have the Bank Nifty, which is down around 260 odd points. But what are the F&O cues at the end of the week? Manglam is here. He's standing by at the big wall to give us some perspective. Manglam.
Well, it is subdued, but we are seeing recovery from the low. So that's a positive that we are seeing. On the Nifty, it is lower, but it's lower now just by 28 points, which is a good, recovery of almost 60 points from the lows of today. The Nifty Bank is doing a bit of an underperformance for the last couple of trading sessions. The mid-cap index at an index level is still marginally in the green. The other thing that is a slight positive versus what we were about an hour ago was that the lines are coming closer to each other. Just an hour ago, we had about 1,700 stocks which were declining for about 1,000 stocks which were advancing. Now the advances have increased by about 100, 150 stocks. The decliners have come down by about 50 stocks as well. So that's a positive. So that basically gives you a rough range for the frontline index after this big rally that we've seen. Yesterday's high and today's low, they become an important consolidation range to track for the frontline index. So let's see where the Nifty goes from here. 26,104 on the way up and 25,784 on the way down. The other part is, despite the decline that we've seen in the last couple of trading sessions, the India VIX hasn't shown any major spike, which tells you that the street is not particularly worried. In fact, Right now, as we speak, the India VIX is perhaps at the lower end of today's trading range so far. The put-call ratio too has cooled off from levels of closer to 1 to levels of closer to 0.8, which tells you that there is balance which is returning in the market, and the range is likely to play out. The 25,800 put writers are still fairly active, telling you around 25,750 thereabouts. There is support that we are witnessing. On the way up, however, 25,900 and 26,000 call writers, both of them fairly active for a premium of 100 to about 150 to about 50 rupees, telling you between 26,000 and 26,050 would be some sort of congestion. A lot of shots added on names like HUL and Colgate, basically FMCG stocks which are not doing too well. But the ones which are doing well today, the likes of Nalco, Hindalco, are seeing short covering. Even IEX, for the second day running, has been seeing a lot of shots being caught on the wrong side, and as a result of which, some short covering on IEX too. Just the final stock that I'll be watching out for today, Sammaan Capital. That stock's up 7% right now. This morning exited F&O ban, but with the open interest jump that we're seeing, it may re-enter F&O ban today.
Okay, Mangalam, thank you so much for that. Important to keep an eye out on Sammaan Capital as well going forward, whether it comes back again in the F&O ban and what is the list over there. We'll watch out for that in the second half of the trading session. But let's move on and bring on board Manish Hathiramani from Deendayal Investments now to talk to us more in terms of the technicals for the market as well. Manish, good afternoon. Thank you so much for joining us on the show. While obviously we've seen a bit of a pullback come back from that festive cheer, second half of yesterday's trading session, and since then we're seeing that pullback. Today also down almost 0.2%. But what are the levels we're keeping an eye out on for next week? And maybe do you think this mild pullback is something that would continue?
Good afternoon to you and to all our viewers. Thank you so much for having me on the show. Well, I don't think we should overread into this small little dip. 25,600 to 25,700 is the actual support for the market. Until we really don't break that on a closing basis, we should be looking at all dips as buying opportunities. The recent crossing of 25,700 has opened up higher targets of 26,400 to 26,500. We are currently just taking a mild breather. If I were to look at the other two indices like the Bank Nifty and Mid Cap, both of them are in line with my thoughts on the Nifty.
Okay, and what are the stocks that you would be recommending today? And in particular, what are you looking at in the financial space?
Well, I'm looking at two buy calls today. In fact, one of them is from the space that you just mentioned, which is Shriram Finance, which I feel is for a target of 740 and a stop loss of 705. This stock has made a very good base around the 550, 600 levels. Higher time frame charts are even suggesting a good technical structure, and dips can be utilized to buy into this stock. If we are able to sustain above 750, we could even go up to 800 to 850. The second one is on an M&M for a target of 3690, stop loss of 3595. The crossing of 3560 was a positive sign for the stock, which was also accompanied by good volumes. If we can get past 3595 on a closing basis, the next target should be as high as 3800.
Okay, Anisha, thank you so much for joining us on the show, giving us the detail in terms of the market that we should be keeping an eye on as levels as well as individual stocks. Thank you so much, as always. But on that note, we're going to slip into a very short break. After the break, we'll be joined by Manisha Gupta, who's going to be in conversation with Vandana Hari of Vandana Insights. Stay tuned in for that conversation.
Welcome back, and joining us on the show now is Vandana Hari from Vandana Insights. Vandana, thank you for your time. And the kind of run-up that we've seen in the crude oil price is heading for a very, very strong gains for this week. Is the reaction to the US sanctions on Russia and the European Union's 19th sanction package also on Russia? To begin with the US sanctions first, and this is directly on Rosneft and Lukoil. How are you reading this? The markets clearly have reacted. Today is a day of a bit of a pause. But how do you see it playing out?
Yeah, good afternoon, Manisha. So indeed, the reaction is almost entirely to the US's blanket sanctions on Rosneft and Lukoil, two major producers and exporters of Russian crude and refined products. Equally importantly, the only ones that were left, the only export channel that was left following previous sanctions against a host of other companies. So essentially, this is like almost slamming the door on more than 6 million barrels per day of Russian exports. In theory, I would add that caveat, in theory, of course, because the market has a lot of questions, how strictly it will be enforced and how long this will last, because the situation is very, very fluid at a very political level. It's quite clear, at least to me, that Trump is hoping that Putin will come to the negotiating table. So for all you know, Manisha, things can take another about turn in a very, very short period of time, which is why you're seeing what I would call a relatively muted reaction from crude. So yes, as you pointed out, up Brent WTI up 5% just in one day, but still not too far from their 5-month low. So, almost a disproportionate reaction if you were to look at, potentially 6 million barrels per day of supply being threatened.
Oh, absolutely. Vandana, what does it really mean for India now? Because while we already are reeling under that 50% tariffs, which can be brought down to 15, 16 is what we've heard in sense of negotiations. And then this comes in. I mean, this is directly at the origin now. How do you see India reacting to this, and what does it mean for India?
Yeah, so while the previous U.S. pressure on India was not absolutely black and white in terms of leaving New Delhi and the Indian refiners, a lot of scope to push back or to basically say, sorry, no, we're just going to continue importing Russian crude. I think things are quite different this time around because of the threat of secondary sanctions. And so what that means is that essentially the U.S. has said, and said so very clearly, that any entity that deals with Rosneft and Lukoil will be liable to secondary U.S. sanctions. So this is a risk that all Indian refiners cannot take because, it essentially that means that they are barred from U.S. dollar dealings and from the U.S. capital markets, which will just be a very heavy price to pay.
Vandana, also, we do understand there's a lot of conversation going in right now. And as you said, the situation is quite fluid. And most of the market participants believe that there is some balancing act that we would see come in from India and US as well. And then almost everybody seems to be believing that there would be some way that Russian oil will find its way into the global markets.
Yes, indeed, Manisha. Good points. There are layers of complexities, which may also explain why you're seeing a cautious or, as I've said, relatively muted reaction from crude. So one of them is, of course, the ongoing trade talks between U.S. and India, similarly between U.S. and China. And we know that even before this week's actions by the US and EU, this has been one of the negotiation points. Trump has been asking both countries to phase down or phase out Russian imports. So there is some leeway, I would imagine. Of course, I'm not privy to exactly where things stand in those talks now, but I can imagine that there might be some negotiation room, like, maybe some exemptions being made or a longer phase down period being given. Right now, it's just 1 month. So basically, after 1 month, there can be no deliveries from Rosneft and Lukoil. So that is indeed possible. And the other one, also, as you alluded to, the whole idea is to get to Putin to the negotiating table. And I do feel, there's some differences out there amongst observers and analysts, whether Putin will buckle this time. I do feel this is a major body blow to him, especially the U.S. going against Rosneft and Lukoil. So it's entirely possible that he does something to de-escalate the situation. I'm not suggesting, find a solution. I think that's going to be very tricky. But just to de-escalate the situation enough to get this pressure off his back. So that's possible as well.
What's your sense also on the prices moving forward from here? I mean, yeah, this week is something else, but when you look at the last 1 month, last 6 months, or this year for that matter, we are trading in the negative, and this perhaps could be a third straight year of negative in that sense.
Yes, I think the overall downward trend of prices this year versus last year, so it has averaged just under $70 Brent, almost $10 lower than 2024 average, and expected to continue edging lower in 2026. I think that is just a factor of bigger influences at play, which is global economy is it's in growth, but decelerating growth. So that's not very good for oil demand. OPEC Plus has been unwinding and pretty quickly unwinding some cuts. So there's plenty of supply and very sluggish demand growth. So in that overall narrative, I can see prices just continuing to drift lower.
Vandana, finally, would you say that this is a bigger blow for Russia than anybody else in sense of consumers of oil globally?
I would think so. Of course, it's not a good situation for China and India either, especially for India, which has benefited from the discounted crude. And, once you've sort of built up one-third reliance for your imports, one-third of your imports are from Russia, you can rejig the supply chains, but it's just a lot of headache. Not good for China either. China has a pipeline between, getting Russian crude, almost 800,000 barrels per day. So not good for these two countries. But yes, as I mentioned earlier, I think this is, I feel that this will make Putin think harder than any of the other measures that have been taken against him previously, either by Ukraine or the Western allies.
Okay, all right. So a story which is definitely not done at this point in time. Vandana as well as Manisha, thanks very much for joining in and speaking to us and giving us all of that perspective. So Brent crude currently at around $65 per barrel. Need to take a break with the news that the Nifty is just about lower by around 48 points. Just want to point out that Kotak Mahindra Bank is one of the Nifty stocks which is losing around 2% at this point. And why exactly is that in focus is because it comes out with its numbers on Saturday. So ahead of that, that stock is weak. So Kotak Mahindra Bank down around 2%. Dr. Reddy's comes out with numbers today. So maybe we should just pull up that stock and see how that is doing, holding up with a gain of around 0.3%. We'll take a short break, but up next we'll get you more on the markets. A lot of stocks in focus. Stay tuned.
Well, moments ago, we were talking about the oil and, the energy space in general in the commodities arena. But now let's take it stock specific. In our special segment, Quarter Se Quarter Tak, we'll bring you earnings expectations from oil and gas sector today. And Sonal joins in on the big wall. Sonal, what is expected of this sector?
Thank you so much for that. We are expecting a mixed quarter coming in from oil and gas space in the Q2 earnings. Now, do remember, we did see Reliance's numbers. The refining performance was quite strong this time around. Company reported strong numbers despite some moderation in petrochemical margins. So let's now move to the oil marketing companies. That's BPCL, HPCL and IOCL. They are set to report robust year-on-year growth thanks to elevated marketing margins. However, those margins have softened on a quarter-on-quarter basis. But on a YY basis, diesel margins, they jumped 39%, ATF margins were up 22%, and LPG margins rose 4%. Even though LPG operations continue to post losses, those losses have nearly halved on a sequential basis to come in at 4,000 crore rupees. But overall, EBITDA is expected to surge sharply, 92% for BPCL, 130% for HPCL, and a whopping 191% for IOCL. This is, of course, on a YOY basis. But on the other hand, GAIL, that is the gas utility company, could see a weak quarter. Lower transmission and trading volumes are likely to weigh on performance, with EBITDA expected to decline 26% on a YOY basis. That's on the back of a 9% drop in transmission volumes and weaker trading spreads. For the city gas distributors, or CGDs, margins are under pressure due to higher feedstock costs. Mahanagar Gas, remember, took a price hike in the second quarter to partially offset those input cost increases. In terms of volumes, IGL and Mahanagar Gas expected to post 5% growth and 9% growth on a YOY basis respectively. But when it comes to profits, EBITDA could be down 9% for IGL, 10% for Mahanagar Gas and 9% for Gujarat Gas. So overall, while refiners and OMCs are set to deliver strong earnings, the gas utilities may continue to face near-term challenges due to rising input costs and softening demand.
Okay, Sonal, thank you so much for that. But, on that note, we're actually going to slip into a very short break. We'll come back with more on the markets, focus on Dr. Reddy's as well as SBI Life, which will be in focus ahead of the numbers as well. Welcome back to Halftime Report on CNBC-TV18. Nifty is where we started the show with a bit more of a decline that we've seen, because now it's down 74 points. When we started the show, it was down almost 50 points. So further decline, 25,816 is what the Nifty is at. But Dr. Reddy's, that's the one we'll keep an eye out on. They're expected to report the Q2 FY26 numbers today. What are we expecting this time? Ekta, over to you.
Well, yes, for Dr. Reddy's this time, the revenue is expected to grow around 7% this time. Margins are expected to come in at around 25.7% and a profit growth of around 5%. Now, the US sales are likely to be subdued this quarter due to a lower contribution from Revlimid generic, plus as well the price pressure in the base business. Now, the US sales estimate is wide. It ranges from around $395 million, which is a flat performance Q-on-Q, to around a 5 to 6% Q-on-Q decline as well. So the street is quite torn in terms of what they could probably report in the US. Domestic sales, however, are expected to be steady, so around a 10 to 12% growth. Expect 15% growth in Russia, led by the rupee depreciation as well. Europe is likely to grow around 7 to 8%, led by the NRT portfolio, which is basically the nicotine anti-nicotine portfolio that they have there, and the street is factoring in maybe 105 million pounds in terms of the NRT portfolio this quarter. Rest of the world is likely to grow around 2 to 3% on a high base, and the margin range is around 25 to 27%. Commentary with regards to GLP-1 opportunity, especially in Canada, US pipeline of launches, as well as the situation with regards to what's taking place in the US. So that's what we can expect in terms of Dr. Reddy's. But we do have Yash, who's joining in to tell us what to expect from SBI Life as well.
Well, SBI Life, of course, reports its second quarter results today. As far as the premium collection itself is concerned, that is expected to remain healthy, largely because of the strong performance which came in the month of September. The new business premium, as I said, expected to grow by 27%, expected to come in at about 11,077 crore rupees. The total APE is expected to grow by 9%. The number that we are expecting here is 5,865 crore rupees. The retail APE, slower growth expected here, growth of about 5%. The number that we're looking out for retail APE is about 5,206 crore rupees. Importantly, VNB is expected to see a growth of 9% at about 1577 crore rupees. And finally, the margins expected to remain flat or about down about 1 basis points at 26.89% versus 26.9%. Importantly, 5 things which brokerages are watching out for. They expect SBI Life to deliver subdued APE growth due to slowdown in ULIP portfolio. Margins expected to remain insulated due to shift in the product mix towards non-par and protection. Investment in distribution and GST impact may offset VNB margin improvement. And finally, SBI Life is expected to be least impacted when it comes to the GST changes, just due to low OPEX ratios.
Take that point, Yash. Thank you so much for that. So SBI Life earnings, those are the expectations. Meanwhile, as we close on this edition of Halftime Report, just watch out for a couple of stocks in the broader markets, which are actually doing a lot better than the other parts of the market. So defense is doing well, so are defense ancillaries. So Shipping Corp, for instance, up around 7%. A lot of volumes backing that stock as well. This week has been good for them, up around 20% this week. The other one is Metal Ancillaries doing too well as well. So Gravita, which is a company obviously in the lead recycling business, that's up around 6% as well. And we are seeing some traction in a real estate company, Signature Global. The first half of this year, not particularly good for them, but the management did indicate that they are on track for launches for the second half of this year, along with collections of nearly 6,000 crores as well. So Signature Global up around 4%. With that, we are out of time on this edition of Halftime Report. You stay tuned. Business Lunch takes all the market action forward. Thank you for watching.